Welcome back to KRS Investment, where investments are made simple. The market gave us a lot of opportunities. For anyone that has been watching, that's been following me from day one, you understand that each step I take, I try to elevate myself. I try to bring you guys along. A lot of you guys made a ton of profit. If you're subscribed to this channel, guys, I appreciate it 100%. If you're not yet subscribed, please go ahead and smash that subscribe button below. No, I keep it simple. I don't overcomplicate it. I like to have my videos so anyone could understand. Anyone could just see and just kind of try to visualize exactly what you're trying to do. Now, if you look at my screen right now, we are talking about Lee's Auto. Lee's Auto is one of the competitor to NIO and Tesla and Xpeng in China. Now, over the course of last year, I've created a few videos, a ton of material. I've done a ton of research. So this is not a deep dive. This is just letting you know what's happening, why the stock price is moving, how it's moving, and if it's a great buy or if you should stay on the sideline. Now, as usual, I like to tell you guys, please do your research to make these decisions. This channel is not responsible for any loss of investment. If you're not sure how to invest, guys, do the proper research. It helps. It makes a big difference. It saves you in the long run. And you know what? This is what I do. Now, let's jump right into it. We're discussing Lee's Auto. Lee's Auto, as you guys could see, in the last month has been tickering downhill. We can see it. It's coming from back on April 27. We saw it was in the 20s. Then it go as low as in the $16 per share, and then we saw an uptrend in the last 2 weeks. It's starting to pick up, and now we can see there's a huge jump here. When we look back, if we go back here to March 25th, that's just yesterday. We saw it close off the day, and then it make a huge spurt, and we can see where it is right now at 23.26. At one point, no, it's at 23.23. No, guys, the reason why the stock price is moving like this is because they have report their Q1 earnings and revenue have jumped plus 300%. Let's take a note. Revenue have jumped plus 300%. This is important because if we look at companies such as Workhorse, we look at companies such as Lordstown, and the list goes on. A lot of these companies are not showing or don't have any revenues yet. So this is why you got to be careful of how you invest in the EV market. Now, I told you guys over the months that Lee's Auto is a great opportunity. We see that we got in the low 20s, and we're able to make a huge profit when it goes in the high 30s. So anyone that hold and make a huge profit, you're able to buy back in the low 16. This is buying opportunity. And this is what I tell you guys. You have to buy at a low price, hold, wait, and then we try to make a profit, and then we sell. Now, if you go in short term, and then this was perfect for you to make a swing, and then you could have buy again and then wait until it breaks back that $30 per share, and then you could decide if you could swing again. Now, keep in mind that NIO, keep in mind that Xpeng, all of these stocks will kind of jump. If you look at today and tomorrow, it will go for a run because once one of these companies normally show any positive sign, then the rest will follow in suit. Now, if you want to break it down, I will put the information in terms of the revenue report. Is that I'm looking at my screen right here that says Q1 revenue rose 319%. I'll try to bring it on my screen here so I can be transparent with you guys. So we can look right here. It says Q1 revenue rose 319%. We see that delivered 12,578 vehicles in Q1 of 2021. It also shows you total revenues were 3.58 billion. This is in Chinese dollars, right? It's RMB. So we're looking at 545.7 million US dollar. This is the revenue that they reported. Guys, there's a ton of stuff here. I will leave the link in the report so you can go over and you can do your own research. You can also go on their website as well, and they give you more information. But if you look back in the last 6 months, we can see the company was performing great. It touches over here that $4 per share. This is what I tell you guys. Listen, you have to set goals in mind. I personally thought, yes, this company will break 40. So the first chance I get to get in the early stage. If we look back a year, right? If we look at last September, last November, like specifically in October, November, this is where it starts to intrigue me. We made a huge run. We made a huge profit. Anyone that breaks over 45, that's great. I break a little bit early, and then I came back in and get in a little bit late again. So this is perfect. I was able to profit one by selling above 40. Then I was able to come back in at below $17 per share, and now I'm up again. So basically, I kind of double up, and this is a strategy I've been using. It's two ways I do my trade. Either I sell, I use my complete profit and capital to reinvest, or in times I'll sell and just use the profit to go back in the company. Now, in this scenario, I went back in with profit and capital because I do believe that Lee's Auto will break $30 to $38 per share very soon. Um, Most likely for the end of the year, we're looking at this stock should cross this $40 to $50 per share. Now, I'm still betting heavily on Neo, so I can't really put too much into Lizado because I already have shares into Xpeng. Once it breaks $30 to $35 per share, I will take my capital investment out and leave completely um, just my profit in it for long term. Guys, if you're following the same plan, it's really up to you to know which price point is the price you want to exit. Now, I will leave the information of the revenue information, also the link for um, and the result to make sure you can make your own conclusion. Again, guys, trade smart, watch the market. If you're in the EV sector, you will see a rise. Keep an eye on Workhorse. Remember, keep an eye on Workhorse. We understand that the feds are trying to make a lot of changes in terms of going green, and definitely Workhorse is not done. I think Workhorse have a strong position to rebound. I've bought up a ton of shares in the low $8, so I'm sitting pretty okay right now. If you guys missed out, it's still at a great price. I believe it's trading just over $9 per share. But I got in the late, I got in the mid, I got in the early in the last few weeks. Now, as you guys remember, we made a lot of trades and Workhorse last summer. We got in very cheap in the lows and we're able to profit when it breaks that 40. And then we're able to get back in again in the 8. And this is what I said is very, very important, guys, to keep in mind of what the market is doing so you can keep buying and selling if you're planning long term. Workhorse is one of the stock that I'm thinking I want to go super long with. So I don't really care right now how long it takes. I'm happy with the purchase to keep that long term. And again, you cannot buy all this the stocks from different EV company. You need to diversify your portfolio. But there are a few companies that I said, you know what, those are staying. Like for example, Tesla. I can't really do much with Tesla. I'm leaving it as it is. Each time it drops, I buy more shares because I still believe that Tesla will break that 1,000, if not $1,500 per share again. Now, in terms of Workhorse, I have high expectation for it. I'm looking for at least 4 to 500% return. So if you're looking at 4 to 5 times your investment, that's fine. It is possible. The stock right now is trading in the low eights. I would say it's trading in the low nine. It was an eights last few days. I still think in the long run that Workhorse will break $4 per share. That's just my take. I think it's worth holding. You can at least make 3 to 4 times your return in a short term span. The same goes for Lordstone. We understand in terms not much was on their report, so the stock kind of pulled back. But in the long term, those stocks could definitely give you 2 to 3 times your returns. Workhorse, I'm keeping. Tesla, I'm keeping. Neo, obviously. I split between Xpeng and Lee, and then I'll see how the market goes from there. I will dip in and out different EV stocks to see where I pick and pop. Obviously, Nikola, I'm waiting to see when they'll make that rebound. That's more of a momentum. Once Nikola starts to run, and the market will run along with it as well. We have still not yet seen a player like Nikola and the mindset in terms of anything to do with a tractor trailer. So once that come on board, there will be high potential, but we have to see. But right now, I'm holding on to Tesla still, Neo, Xpeng, workhorse. And of course, guys, you got to hold some Apple shares. It's still trading low. Keep buying shares of Apple when you can, because when the Apple car comes out, hopefully in the next 2 years, we will start to see where the market going. But right now, let's focus on Lee's Auto. The report in terms of the Q1 results was awesome. We're up 300%. We are still delivering a ton of vehicle out. The volume is not as high as what I expected, but still, it is still showing revenue compared to the other companies that we're holding, right? So if you guys are watching this video, guys, hopefully this is not the first time you touch base on this channel. If you have been to this channel before and if you have not yet subscribed, please go ahead, show some love and support and hit that subscribe button right now. Until next time, peace out.